Hello again, everyone. Welcome back. I took last weekend off for the Christmas weekend, and now we've got the end of the year scenario here. Let's just take a look where everything is. I titled this video Highly Vulnerable because that's exactly where I think this market is right now. We've had one heck of a rally since the beginning of November, and I think this soft landing euphoria has gotten pretty carried away. We're going to find out here shortly. All right, let's start off here with the side-by-side view of the Dow Industrials, the S&P 500, and the Nasdaq 100. The Dow was up 311 points this last week. Okay, so we continue to push, and you can see this dashed line is the all-time high that was achieved back in January of 22. And of course, we've pushed above that now. I'll talk about the long-term scenario on the Dow in just a minute. On the S&P 500, we haven't quite done that. We haven't pushed above that 22 high, but we were up 15.2 points this week. But look at the range on the S&P this week. Now, I know it's a holiday shortened week and the volume has dropped off dramatically, but the high and low on the SPX, 41.31. Pretty narrow little trading range. Very compressed price action. Similar type thing over here on the NDX. It was up 48.53 at the close, and yes, the last 2 weeks have kind of nudged above that November 21 all-time high that had been there. So now we're sitting at a new closing all-time high here on the NDX. Okay, so that is closing on a weekly basis, let's put it that way. All right, so let's take a look at the side-by-side of the industrials and the transports. So here's what the transports did. I still think there's this potential scenario for a head and shoulders pattern. We'll see if it plays out. I've got this dashed line up here parallel to this line right here. And so far it's holding. You know, here's the prior week where we had a little doji candle. And now we never took out that high, and we had a down week here, down 165 points on the Dow transports. So we'll see what kind of fall through we get here on the transports. All right, let's take a look at the Dow Industrials. And what I'm going to look at is this is a monthly view. So the Dow on a monthly basis was up 1,738 points this last month for 2 months in a row. So it's interesting, this little 2-month sequence looks very much like October, November of 22. And yeah, I am labeling this as an ABC. I think we have a flat going on. I think we had a 3-wave move down for A and a 3-wave move for B. And we're about to find out whether this is complete. If it's not complete, it's very close to being completed, I believe. We'll see. And then once this is finished, we should get a 5-wave scenario. Now, do not look at this because of where this is sitting and say, well, Joe is predicting it's going to go to 18,000 by such and such and that type of thing. No, this is just a path forward. Okay, the C may end up being here, or it may end up being here. So we're not going to know any kind of estimate for the C wave until we start to see the wave structure as it comes down, okay? But my expectation is if this is indeed a flat, as I'm thinking it will be, then this will be a 5-wave move, okay? Now, this could also morph into some kind of triangle, 3-wave, a series of 3 waves, but I think it's more likely to be a flat in here. Now, what do I think this means? I think what's going to end up happening is because I do believe the super cycle pattern did end in January of 22, I think this could very well be the first wave, you know, like a 3-wave move for the first wave of a bigger flat or a bigger triangle. Just larger gyrations in here. Okay, that's what I think could be setting up, but we're going to find out here real soon. Now let's zoom back out and take a look at the bigger picture. Okay, so this is what I've got for the bigger picture. I think we've had a major move up and I've got it as cycle wave 5 since 1982. These numbers that you see in parentheses here, this is Professor Schiller's cyclically adjusted price earnings ratio, the CAPE ratio. This low in 1982, August of 82, was the lowest since 1932. Okay, then we took off, and then the high, the all-time high that was achieved was in December of 99. Now, you see where we got up here in January of 22. It may have been December of 21, but I think it was January 22, 38.58. Now, we're sitting at pretty elevated. I don't have the latest data in here, but we're sitting slightly higher than where we were then. So pretty significant. And of course, these two right here, this reading right here and this reading right here, are the only two that were higher than 1929. So are we sitting here at, extremely overvalued evaluations, even when you look at even on like a fundamental basis? Yeah, absolutely. And then technically, the count and the wave structure that we've got says, hey, we're very vulnerable in here for this thing to turn down in a big way. Well, we'll see. All right, so that's where we sit on the monthly view on the Dow Industrials. Let's take a look at the SPY. Okay, here's the S&P 500, this ETF, the SPY. It was, well, let me look at the data over here on the daily. It was up 166 for the week, very short abbreviated week, down to $1.38 over here on Friday. We'll look at the daily here in a second. First, the weekly. So I've got the same count that I've got on the Dow Industrials, in that we had a three-wave move down for wave A and a three-wave move back for wave B. Now, we haven't taken out the high up here, but the reason I've labeled this as a B is because it did retrace at least 90% of A, and that is a requirement to be a B wave versus being part of a zigzag, let's say. So right now, I'm labeling this as a B, and I believe the three-wave structure that we've got is a complex double zigzag, WXY, and the Y zigzag right here is this ABC that I think is very close to being completed, if not already finished. You can see the divergence that's showing up in here since mid-July to where we're sitting right now, and that's just on the RSI. Let's take a look at the daily view. Here's the count I've got. I think that here in this C wave, what we're looking for is 5 waves in this last little C wave move. And I think we're very close to that being there. And we've got the divergence that showed up on the daily, this last little push that happened over the last week. So right now, we'll see, is this rolling over? Are we about to get a breakdown? That's where I think we're sitting right now. Okay, that's with the SPY. Let's take a look at the Qs. Okay, here is the picture for the Qs. Down $1.78 on Friday and up $1.14 for the week. And also, again, very tight little trading range in here. 5.34, $5.34 between high and low for the last week. Now, I know it was a holiday shortened week, but it's also the volume dropped off fairly significantly with the holiday session. So we'll see if we're about ready to roll over here. This is the scenario we've got. Let's just take a quick look at the weekly. I've got it labeled as the same type of scenario. Now, it's stretched above the all-time high versus the SPY, in here. But it's interesting when we look at the double zigzag that we've got, and here's the ABC. The C wave is very close to 61.8% of A. So when you look at a zigzag scenario, the first target you have is for C to equal A. But the other that you look for is relationships, Fibonacci relationships in here, and the first one is 61.8%. We've got pretty significant divergence showing up in here between what occurred back in June, July, and where we're sitting right now. Now, we'll see if that continues to hold, but that's the picture that we've got as of right now. Now, the wave count in here is a little bit different versus what I just talked about on the SPY. I've got an extended wave 1, sharp wave 2, and then this wave 3, wave 4, and a little wave 5 with pretty significant divergence. I do have an alternate count on it, but the alternate count says we had a brief little wave 1 here, wave 2, 3, 4, and 5. I'm going to stick with this for right now because it's, in a way, six of one, half dozen of the other. So that's the picture we've got. We'll see if we get the breakdown. If this is truly the end of the fifth wave, this should come down, start to, hit lower lows and start to roll over and break down fairly quickly. Okay, that's where we've got on the Qs. Let's take a look at the Russell 2000 ETF IWM. Now, everybody's raving about the small caps, and everybody's raving that the small caps are going to continue. Of course they think it's going to continue because they've done nothing but go straight up, and everybody likes to just do straight line projections. Well, not so fast. Down $3.33 on Friday, down 77 cents on Friday. This is a potential reversal candle here on the weekly chart. And let's take a look at the Elliott Wave picture I've got. I've got it as this. Now, this is not a flat because the B wave did not retrace 90% of the A wave. So what I think is going on the Russell is that we have a zigzag, okay? And therefore, we have a 5-wave move down, an expanding leading diagonal for wave A, and a 3-wave for B, okay? Very sharp move that happened here on the C wave. And we'll take a look at it. I've got it labeled as WXY. This was very tricky. For the longest time, I thought it was a sideways type triangle for B. And triangles can occur in B waves, X waves. Typically, you look for them in fourth waves. But right now, this is the way I think this is looking. And if this is the case, and if it's done, we should start to see some continuation and breakdown on this to the downside. So for this Y, I've got this as an A, B, and extended C wave in here. And the 5-wave count I've got on the C wave is this. And I think we are at the ending stages of that, looking for it to continue to come down, start closing these gaps, and head south. So that's where I think is what's happening. We'll see what the price action unfolds here over the next couple of weeks. Okay, that is the Russell 2000. Now, one of the biggest mover of all the ETF sectors on the year were the semiconductors. Now, I'm going to take a look at the SOX because I have better data on the SOX than I do on SMH. So let me pull that up. So I've got the SOX in the same situation that I've got with the major indices I just talked about right now. I think we've got an ABC going on. I think we have a WXY, a double zigzag, and I think we are very close to being at the ending wave, if not already there, the end of this C wave here of the Y wave. Okay, so this is the picture I've got on this. Again, the same kind of divergence is showing up. And I would not be surprised at all to see a whole heck of a lot of people taking the profits if they sat in the semiconductors all year long. They had one heck of a move. And when I look at individual semiconductor stocks, yeah, they look like they're very vulnerable. Okay, so that is the picture we've got here on the SOX index. Let's take a look at a couple indicators. The first one I want to look at is the McClellan Oscillator. Now, look at the McClellan Oscillator in here. This peak is November 3rd, okay? And so the entire rally that occurred from the beginning of November, November 3rd, through the end of the year was not confirmed by the McClellan Oscillator at all. And we're sitting at like a plus 9.4, about ready to break below the zero level, which would be an indication that selling is starting to take control. Now, the Summation Index has been, just continue to push higher with the rally, okay? But, we've gone above the July levels, but we're not as high as we got in February. This is the February 2nd level, but we are getting pretty extended, as you can see. When you look back to August of 22, February of this year, and then where we're sitting right now. So that's the picture that we've got out of the McClellan Oscillator and Summation Index. And then the last thing I'll show you is just the percent of stocks above their 50-day moving average on the, let me go back to the daily view here, on the S&P 500. Okay, we are up here at 89.1% when you round it. Okay, so we haven't broken down. We started to do it back here on December 20th, where we got to close below the 10-day moving average, where we're just kind of hanging there. Just kind of hanging there. It looks like we're about to roll over. We'll see. And you could see when you get up in this rarefied air, you don't stay there very long. Okay, so this is going to get real interesting real quick here in the month of January, I believe. So that's where we sit, and it doesn't matter whether you look at this on the S&P or whether you look at that same indicator on the New York Stock Exchange. It's the same kind of thing. So we're watching right now. It hasn't really said that it's, I'm looking for it to break down, looking for it to close below that 10-day moving average, looking for the moving average to cross to the downside and this to start to roll over and break down. We'll see what happens this coming week. All right, that's it for this weekend. If you felt like the video was helpful, give it a thumbs up. If you are not a subscriber to this channel, hit that little subscriber button. And if you'd like more of this information on a regular basis, head on over to joehenches.net. Check out the website, check out the membership. Everyone have a wonderful rest of the weekend, a happy new year, and we'll talk to you on the next video.